The major markets climbed higher once again last week. The tech-centric NASDAQ reclaimed its spot as the top performer, followed by the MSCI World Index and the S&P 500. The MSCI World Index is comprised of all 23 developed countries and covers approximately 85% of the free float adjusted market capitalization in each country. In short, this provides a comprehensive view of the markets across geography and capitalization. Last week was one of the rare weeks in recent memory in which the developed global markets largely outperformed the domestic large cap market. Last week was marked by news from Jerome Powell during his testimony to the House Financial Services Committee that the Fed planned to transition away from buying debt via ETFs. Over time, we'll gradually move away from ETFs and move to buying bonds, Powell said. It's a better tool for supporting liquidity and market functioning. Yet he reiterated his support for the current measures, saying, "We want to support market functioning because when markets are working, companies can borrow. People can borrow. Companies aren't feeling tons of financial stress, and they're less likely to take cost-cutting measures and things like that." In economic news, the weekly initial jobless claims reported Thursday still remain elevated, with 1.5 million new claims. While this is far from the peak set at the end of March, it is still more than double the prior record reading set back in October of 1982. The bond market took last week's developments in stride as the Bank of America U.S. Broad Index added 0.18% last week, while the 10-year Treasury remained practically unchanged, closing at 0.7%.